let's talk about the S&P 500. This is the ETF SPY. I'm sure you're all aware of this trend line that we drew in last time. The one that starts all the way back at the bottom of COVID-19 and has been consistent all the way up till we had a break about a week ago, and then now we're breaking up into new highs, looking to test the upside of this rising wedge. So, where do I think we're going from here? In my last SPY video, I showed you how I got this level and why it's really important. Here's how I got it. We have a fib retracement from the last bear market, who is now retracing all the way up to this 443 level. So I am a technical trader, right? So I look for technical setups. And to me, this is an opportunity. If I can get a second reason to be short the market, when it gets here, I will definitely get short. I posted that video a long time ago about how I found that level and that it was most likely going to get filled. Now, I've just been waiting for a second reason to enter. For those of you who are traders, I'm sure you're aware of something called a time count. And for those of you who are not traders, a time count is when you have 7 candles of the same color in a row. It looks like this, right? So we have the last red candle and we have 1, 2, 3, 4, 5, 6, 7. Usually it's a bigger candle, which we call a puke out. It's when they take out stop losses, and it tends to be larger than the prior candles. And then you'll have, some calls it a puke out candle, other calls it a wick candle. Then the next candle will be the start of a trend change, which in this scenario, because they're green, will be a big red candle. Now, how often do these happen? This was the last one I found. Then we had to go all the way back to 2007 to find the previous one. They don't happen often. Me, as a technical trader, I usually use them during day trading to be able to time the top, right? We find a strong level that we know is coming up, and if we see a time count, then we enter on that position as it enters the level, because it gives us a way better probability to succeed, because we know that a change is coming. We can enter on that candle and then see the candle come in and then have a stop above it. It gives us a perfect risk to reward, right? In this scenario, as soon as this opens, we can enter a position and wait for it to close to give us a stop. And then the target would have been down here. In this case, it did not work out, but the risk to reward is phenomenal. In this scenario, we have a 5-to-1 risk to reward ratio, right? What you should be learning from this is these time counts, they work, and they help us time when a small trend change is coming. That combined with something else is extremely, extremely powerful. Now we have my level coming up, and we have 1, 2, 3, 4, 5, 6 candles in a row, which means that the next candle on the monthly chart should have some sort of a puke out, hit my strong level, put in a red candle change, and have 2 reasons to fall down. That initial sell-off could trigger this big rising wedge and create an even bigger sell-off. Now we have 3 reasons to go short if we see a large green candle come into this level. 1, we have the time count on the monthly chart. 2, we have a full Fibonacci extension coming in here at the 443 level, and a potential top trend line for a rising wedge that might start a hard sell-off for the market. Now, if this were to happen, let's see how far down we can expect it to go. First target for me should be the 200 moving average, which is now at 383. It will be somewhere in here at the time of hitting, and the topping tail should not get past 450. So let's say that this ends up going all the way up on a wick to 450, then the stop loss will be at 450. Still, it's giving us a 10-to-1 risk to reward, and that, in my book, with 3 strong reasons to enter the short, is a great trade. On the risk side of things, if it were to go wrong, this is what it would look like. Because of the time count that's coming in, it'll be something like this, what we had last time, right? So we had a time count and then a puke out, and then we enter the position at the top of this large green candle. We know it's a large green candle because it's going to be significantly bigger than all the ones that have come up before that. We enter here, wait for the candle to close, and then put a stop loss above it. Okay? That will be our risk. Then, because of the time count, we will see some sort of a bigger red candle come in. If we're wrong and it does not get to our targets, we'll get out at the stop loss as it goes higher. I hope that trade setup is going to be helpful for people. I am certainly going to be taking it. I hope you will too. Thank you.